Hello everyone, this is Rachel live from 𝐊𝐚𝐥𝐤𝐢𝐧𝐞 Studios and you're watching the early trades. Let us cast an eye over how market chart is panning out today. Let's see why the ASX slipped below the 7,000 mark in early trade. Australian shares are opened slightly lower on Wednesday, snapping a 3-session gaining streak, tracking weak cues from US markets. The ASX 200 is trading lower by 122 points, or 1.73% at 6,943. That's despite crossing above its 20-day moving average. All the 11 sectors are bleeding in the red, while materials led the fall with over 1.23% loss. Other worst performing sectors include information technology, utilities, healthcare, telecommunications services, REITs, materials and industrials. The top 5 losers on the ASX are EML Payments, St Barbara, Perenti Global, Whitehaven Coal and Oil Search. Some of the top performers are Appen, Nuix, Eagers Automotive, Credit Corp Group and the Flight Centre Travel Group. Snapping a 4-session gaining streak, energy stocks were under selling pressure today, tracking a fall in the crude oil prices. Australian energy stocks such as Woodside Petroleum, Origin Energy and Oil Search are trading lower. Oil prices fell after hitting 2-month highs, while the WTI crude oil price was down 1.2% to $65.49 a barrel. The Brent crude oil price has fallen 1.05% to $68.74 a barrel. Shares of gold miners such as Northern Star Resources, Newcrest Mining, Resolute Mining and De Grey Mining are also trading in the red, in line with benchmark indices. The gold prices closed in on a 4-year high due to weakness in the US dollar and a fall in treasury yields. The spot gold price was up 0.07% to $1,870,000.12 an ounce. Moving on now to other shares in the news. EML Payments is the top percentage loser on the ASX so far today, falling over 43.5% in opening trade after it came out of a trading halt this morning. Pairing some early losses, the stock of the payments company is currently trading at $3.28. That's down 36.3%. The company reports that the Central Bank of Ireland may take actions to restrict its Irish subsidiary PFS Card Services, which contributes 27% of the group's global revenue. The CBI's concerns relate to the anti-money laundering and counter-terrorism financing risk and control frameworks and governance. Technology firm Nuix extended its rally for the second day and shares surged 2.5%. The stock of the Macquarie-backed company surged after Nuix chairman Jeff Bleach told the investors that the company was undergoing an interesting transition to become a public company. Shares of Appen rallied 10.85% to $12.46 and was the top percentage gainer on the benchmark. The company has released a business and trading update for May. It has also announced a new organizational structure aligned to the company's product-led and customer-centric strategy, as well as changes to financial reporting that provide greater visibility of the drivers and performers of the business. The share price of Eagers Automotive are currently trading flat at $14.38. That's pairing their opening gains. That's after the car dealership reported a growth in profits through April as car sales rose following the disruption caused by COVID-19. In its annual general meeting today, Eagers told investors that its operating profit for the 4 months to the end of April stood at $127 million. Serco has released earnings for financial year 2021, which showed that the company faced demand constrained due to disruption in the travel industry amid the COVID-19 pandemic. Total income, including grants, stood at $16.9 million, while operating revenue was down at 52% against the prior corresponding period. The net loss after tax for the year was $29.4 million. Online travel agent Webjet has also released its full-year financial results today. The company has shifted its financial year to the March end and released full-year figures for a new year ending date of March the 31st. The company saw its net loss widening by 9% to $156.6 million over the 9-month period, while revenue fell 86% to to $38.5 million compared to the figure at June 30th last year. According to experts, the company would be reporting loss in the given period due to challenges posed by COVID-19 headwinds. Shares were trading 2.14% lower at $4.57. Moving on now, BNK Bank Incorporation has agreed to enter into a non-binding agreement with Goldman Sachs. The initial alliance would be for 5 years. Goldman Sachs will provide funding and act as an arranger, structuring agent, and also as a distributor. BNK will be the originator, servicer, and trust manager. This will be for any securitization program having uncommitted facility limit of $500 million. Now, moving on, let's take a look at a special report on what United Malt Group's weak earnings mean for their shares. On Wednesday, they reported a fall in profit and revenue for the half year ending 31st of March 2021 due to the challenges posed by COVID-19. The company also noted that the financial results included the additional costs of being a standalone listed company compared to the prior corresponding period. The revenue fell by 11% to $590 million as coronavirus affected the volume and changes in product mix at the company's key geographies during that period. EBITDA was $52.7 million, slightly ahead of the guidance that was provided by the company at their annual general meeting on the 18th of February. They pointed to a figure of $47 to $50 million. Included the $6.3 million negative effect of the translation of earnings into Australian dollars and also one-off costs of $7.4 million related to the closure of the Grantham facility in the UK and the transformation costs there. The company's reported net profit after tax of $13.2 million, a decline of 30% on the prior corresponding period. Commenting on the results, Managing Director and CEO Mark Palmquist said United Malt's resilient business model had enabled the company to manage through the challenging environment. The continued COVID-19 related lockdowns in the key markets of North America and the United Kingdom affected volumes and, as already mentioned, the product mix during the half from the ongoing effects of the reduction in on-premise alcohol consumption, he also added. The company says that its volumes are expected to remain below pre-COVID-19 levels for the remainder of financial year 2021. It expected volume to recover once restrictions on social gatherings were consistently lifted across the key geographies and a return to mass gatherings that includes sporting events, concerts and travel for when they're permitted. Since March 2021, volume was tracking at around 95% of the pre-COVID-19 levels. On Thursday, the 18th of May 2021, the stock of United Malt Group closed at $4.42. That's down 0.1 point or 0.23% against the previous closing on Monday, the 17th of May 2021. The United Malt Group competes with Coles, the Woolworths Group, Coca-Cola Amatil, Treasury Wine Estates and Metcash, amongst others, in the consumer sector. That's all from me for now. Stay tuned with Kalkine TV for more live market updates. We'll be back very shortly with more news on the markets, the economy, diverse themes and sectors. I'm Rachel, signing off for now.